Let's take a look at your market news now. Asian markets mostly fell today as Donald Trump shocked the world by pulling out of next month's historic summit with North Korea's Kim Jong-un. However, analysts believe the losses were tempered by hopes that the talks can still be rekindled. The Japanese yen weakened vis-a-vis the US dollar. This proved slightly positive for exporter stocks. The benchmark Nikkei share average closed up 0.1%. Hong Kong shares fell today amid geopolitical concerns, as well as the Trump administration decision to launch a national security investigation into car and truck imports. The Hang Seng index declined by 0.5%. On mainland China, most sectors lost ground, but consumer and healthcare firms gained, as investors sought to shelter in the two defensive sectors. In the end, the Shanghai Composite Index ended down 0.4%. To Wall Street now, where US stocks ended down slightly last night after President Donald Trump cancelled a planned summit with North Korea's Kim Jong-un in order to probe into auto imports. More positively, gains in Netflix pushed its market value to a record. The Dow Jones Industrial Average fell 0.3%. The S&P 500 lost 0.20%, while the Nasdaq Composite Index dipped by 0.02%. For more on the markets, we cross to Nompumelelo Siziba at the Johannesburg Stock Exchange. Good afternoon, Nompumelelo. It seems like President Donald Trump is affecting markets across the globe.
Thanks very much, Nzinga. Yes, he continues to do that. He shocked a lot of people by deciding to cancel that meeting with the North Korean leader. But to some degree, I think it was on the cards, because on the other hand, North Korea was also threatening, saying, you know, oh, they're putting too much pressure on us on this denuclearization issue. You know, we may not, you know, go ahead with the meeting. So I think in the end, he just thought, let me just cancel this thing. Although, as you say, you know, he does say that there is room and opportunity for them to meet further down the line. It's only in March that these guys decided that they were going to talk. So perhaps it's too premature for them to try and meet as early as June, because, of course, there's a wide gulf between them in terms of the US's demands and those of North Korea. In terms of what's happening on the all-share index at the moment, we see that it's currently in the red. The local currency has also, you know, it's lost a little bit of ground relative to major currencies, but nothing that much, about 5 cents or so. So that's what's been happening. And then the oil price, it did slide slightly. This on the back of Russia beginning to open up a discussion with its OPEC partners about the possibility of maybe raising crude output, because remember, they have that deal where they've put a curb on supply. But now, in light of what's happening with Iran and Venezuela, Russia's proposing that they should perhaps raise that. So that had the impact of lowering the oil price, which is great for consuming countries like South Africa. So we wait and see what happens there. Let's take a look at the indicators. He's become somewhat of our Friday special. It's Warwick Lucas. He's from Galileo Capital. Thank you for joining us.
My pleasure.
Good stuff. So a lot has gone on this week. A lot of it focused around the US-China trade spat. You know, is it on? Is it off? And then, of course, this North Korea business as well. So based on what you've been seeing over the past week, what's your analysis of how markets have performed?
All right. Well, to some degree, I think that markets are becoming perhaps a little bit more to noisy news. So as you've pointed out, I mean, the volatility measures itself are quietening down. And, of course, we're also seeing a strengthening dollar, which is keeping a steady hand on markets there as well. But I think in terms of the likes of North Korea, for example, I think it's something that the markets are relatively calm about. I mean, both of them have relatively truculent negotiating styles. In some ways, perhaps Trump was the only one that could have negotiated with North Korea. And as the old saying goes, you can't bull dust a bull duster. So it's off to round two in a couple of months, I'm sure.
Let's see. And then then let's take a look at Europe. I mean, there's been a lot going on, particularly around Italy. There have been concerns about political developments in that country and also concerns about the general growth outlook for the EU. Your thoughts?
Okay, so the EU is still at the early point of a recovery. And being such a messy construction, there really is not a whole lot of evenness as to how that recovery is coming through the EU, and particularly in the case of Italy. Now, I mean, Italy has always been a bit of a political joke along the lines of, well, an Irishman walked into a bar type of thing. But in any case, if we look at Italian real incomes, I mean, Italian wages are basically 5% below where they were in 1995 versus Spain, France and Germany, where they're all up over 20% from that point in real terms. So Italian consumers and citizens are clearly going to be grumpy, plus they've got one of the fraudest banking systems in the region. It all adds up to quite a difficult cocktail in Italy. And you can see that, that some of the issues that came to the fore in Brexit are going to come to the fore again in Italy. And the EU is going to actually have to do some harder work to keep itself together than they have done up until now.
Okay. And then, of course, Russia raising this conversation about the possibility of it and its OPEC partners raising output because of what's happening with Venezuela and Iran. Of course, that's great news that the oil price came down. Can we expect it to remain low if they decide to, lower, if they decide to go down that path?
It's certainly constructive. I mean, we've already seen that US shale isn't going to come to the party straight away, the reason being that the pipelines in the US can't get it out. I mean, the gap between Western Texas and Brent has now opened up to more than $17. So clearly that's not going to offset matters. So if the Russians don't come to the party, yeah, I mean, in the short term it does keep pressure upward on the oil price.
And in terms of, obviously, yesterday we had the Reserve Bank come out and keep the repo rate unchanged at 6.5%. But of course, it did flag up, some concerns about the oil price, although funnily enough, it expects average oil prices to be between 65 and 70 going forward, which I find quite interesting. So given what's happening with the oil price and their decision and their forecast remaining pretty much unchanged for inflation, do you think they made the right call?
I think it's probably roundabout right. I mean, they did cut when they could a couple of months ago. I mean, the economy itself is not in a particularly strong place. We've seen that with GDP numbers coming through. But by the same token, we're also seeing a little bit of cost push coming through, and that's from things like a weaker rand, oil prices, etc. I mean, longer term, it's a reasonable oil price forecast. That's where the 5-year futures are sitting, but a lot can happen between now and then. So it's as good a guide as any.
And then this week we did have quite a lot of data coming out, quite a lot of company results coming out. SA Inc., sort of SA-facing companies, coming out with not so great results. People complaining or CEOs complaining about challenging environments and the consumer under a lot of strain and so on. Was there any particular stock or company report that you saw that stood out for you? And what's your general impression about what these company results are saying about the economy?
All right, so generally a very tough environment coming through in most figures. I mean, we saw a very rough trading statement come out of Massmart, but we also saw quite encouraging numbers out of companies like Stefanuti, which basically just ran a tight shop and despite being in the horrendous building space, managed to keep things on a steady keel. But what it showed generally is any kind of loose management got punished harshly.
Indeed. And then what about this Ramaphoria that we were experiencing a few months ago? It seems as though the pinning all the hopes onto an individual is not translating into how the economy is performing.
I think a realization has come through that it's not just the flick of a switch. I mean, there's a lot of fixing up to be done here. and the cupboard still has to be shaken out for bits and pieces that fell off the skeleton. So it's going to be a while yet, but I think it's a process of digestion that we're going through. I do expect that towards mid-year we'll start seeing some slightly better economic data coming through.
All right. I'm going to leave it there. Thank you so much, Warwick, for your time as always. Later on today, maybe after the market has closed, S&P Global will be making a ratings determination on South Africa. We hope that they keep their outlook on the country and their rating unchanged. If not, and it's negative, it could create a wobble in the local market.